the last couple of days. That's just the type of environment that we are in right now, a lot of uncertainty. That's why we have to take our trading down to intraday at the moment. Start to focus a little bit on individual moves, start to look at key indicators as we go, and just kind of take it from there, because there is a lot of opportunity today. It's just a question of which way this market is going to move. And obviously, as I continue to argue, you want to react. You don't want to try to predict too much in this environment. Good morning, SoCal Prisoner. Good morning, Tall Tex, Dale, G-Man, Eric of Northport, Secret Agent Charlie, Pumpkin Spice Equinox. That sounds like a band. Now I don't even know what. Sounds like a band, but also a healthcare center gone wrong. All right, we'll talk about momentum. We'll talk about, well, there is no negative momentum. You'll get the runner at 9 o'clock. And as always, we are digging into the current state of affairs. Why join us right now? Well, you've seen it the last couple of days. We had that huge sell-off on Monday, on Friday. We had a bounce back that happened on Monday, sell-off Friday, bounce back Monday. Then you have a reversion yesterday. And I was talking to the people who are members of our NVIDIA 4D class, and what do you see? This happened yesterday. This was the 3-minute chart on the SPY. Remember, short-dated options, that's 653 yesterday. Once it bottomed out in the third standard 24-minute line over the 60-minute line, and just pure momentum through the rest of the day. That's how this market is operating. So once again, we go back to what Stanley Druckenmiller has talked about in the past. There is a total lack of trend. And when we get down into these third standard deviations of price, particularly around volume weighted average price, and of course, these shorter duration 3-5-minute moves, this is the type of environment where you got to be cautious, but you got to take some risks, and you have to be willing to try to focus on where are these opportunities coming. They're coming at very statistical levels that present higher probability trades for people who are paying attention. So we'll continue to dig deeper into these opportunities as they emerge. On the momentum side, we're going to dig into this momentarily, but you could see we are at -6 on our intraday. We were at -40 yesterday. The SPY has moved back. The NASDAQ has moved back. I know, it's whiplash, and all you can do is effectively measure it in this environment. And as I'm saying right now, as I'm looking at this right now, looking at Thinkorswim, you can dig a little bit deeper. You can look at some of these charts, and you can see that the SPY has pushed right back above that 8 and that 20 and that 50. So what are we looking for? To be honest with you, continued momentum. Lower highs and lower lows have now turned into higher highs and lower highs. Momentum continuing to remain strong. And you just continue to see this ongoing move upward as we just dig deeper into this environment. On the daily chart, popping here, right? Back above those key moving averages. We bounced right off that 50-day, and we came right back up. That has been the nature of this market for a large period of time. And if you are shorting, obviously focusing between the key moving averages, which has always been a particularly favored strategy of mine, we tapped right off that level, and we bounced right back yesterday, very, very sharply. So continuation of momentum. You're seeing a lot of the crypto stuff pop back up. Gold continuing to remain strong. And we just take opportunities as they emerge. You have to be on top of it every single day. You have to be ready and prepared for these reversion moves to happen as we go. So we're green again. This is a little bit unusual, and typically I get bearish short-term pops. But for right now, again, as I've noted time and time again, liquidity is at an all-time high globally. China continues to pump into its economy. Powell came out yesterday, effectively, as we predicted, stated that quantitative tightening is likely done. What does that signal to the markets? Well, lower, obviously more rate cuts. But I'm going to tell you right now, They're going to turn the money printer back on at some point. The reserves still remain under pressure. QE, they might not call it that. QE, I'm going to predict it right now by April. It's not going to be called QE. It might be an injection into the repo market. It might be some new bank lending program. It could be in some way some capital that will be injected into the process to ensure more merger and acquisition activity in the banking sector. I don't care what it is called. What I care about is that it achieves the outcomes of quantitative easing, which means if we're doing more of it, we're going higher. And again, the liquidity cycle is not expected to peak until next year. And that might put us around 7,100 on the S&P 500. Something needs to break before they print again. Peter, things have already broken. The reserve system fell under $3 trillion. That's broken. That's your problem. The last time that we saw comparable moves on banking reserves was 2019 during that repo crisis. So there is still something wrong there. There's something wrong in Japan. There's something wrong in France. Look around. 225 years of U.S. history. Oh, forgive me, 250 years. 250 years of U.S. history, perpetual financial crisis. That's what we do. That's what we do. All right. Gold's above 4,200. Let me take a little bit of a step back on this. They never stopped printing. They engaged in what is known as quantitative support. They supported markets. They rolled over bonds. Bond buying is bond buying. They didn't print. They just simply provided financial stability. All right, let me tell you something, because I'm not a big victory lap guy when it comes to stuff like this, largely because I'm a lot like Brad Pitt. I'm just like Brad Pitt, everybody. Did you know that? No, but Brad Pitt's character in The Big Short. The guy who says, hey, don't celebrate when the market is imploding. Don't celebrate when GDP falls. Don't celebrate when the economy tanks because every 100 basis point move that transpires that these kids were betting against, ultimately you see tens of thousands of people losing their jobs, losing their homes. I don't celebrate when I make bearish calls that ultimately lead to, well, the debasement of our currency. 18 months ago, I wrote a report. It was called The Hedge of Tomorrow. Basically, the entire premise was they're going to print more money. They're going to engage in lots and lots and lots of support to the treasury markets. They're going to issue frontier bonds. We're going to see more monetary inflation. And the thing about this today is the fact that gold is up 100% since that call. Silver is up 100% since that call. That is not a reason to celebrate. It's a nice that I have roughly, I have to rebalance my entire account because I went very heavy in gold at the time. But the reality is this: there is a problem with the currency. This is a white swan event. This is an event that everybody ignored because for so long, the gold bugs were wrong, right? We ignored the obvious. Gold bugs have long been ignored. They were mocked, and now they're taking their victory laps. But the reality is that several factors was why there was this blind spot. A lot of people don't even realize that gold has outperformed the S&P 500 since 2000. It's smoked it. But the reality is, for decades, central banks and the mainstream finance voices promoted that gold is dead. They said that equities were the default growth asset. They said that bonds were the default hedge, and that gold was this barbarous relic. Even as central banks have been buying it hand over fist for the last year and a half. Gold underperformed equities from 2012 to 2020. They have smoked the market, particularly the GDX has just been on fire. Investors assumed that the pattern was permanent of the financial assets continuing to move higher. The money printer made everything feel like, hey, they're going to keep printing. That's going to be good for equities. But risk models don't keep gold as a core hedge. Investors assumed the dollar reserve status wasn't going away. And the currency paradigm shift, basically the last 18 months have marked the beginning of the end of the dollar-centric financial world. We are in the middle of a paradigm shift. We are now at the point where central banks own more gold than US dollar reserves. We tried to weaponize the dollar. We tried to freeze out Russia. It didn't work. They went in search for new alternatives. They started to buy gold. They started to accumulate other assets. And by the way, the risk-free rate, that 10% interest rate, or forgive me, the 10-year bond, that thing is not risk-free. Ask the banks how they felt about the risk-free rate in 2023 when the Silicon Valley banking crisis happened. So what's the point? The point is we are in a major transition of the monetary system right now, and we're probably in the second inning. Gold has moved 100%. And remember, when it comes to shifts like this, they typically last 2 to 3 years. We're only 18 months in. So we're up to 4,200, the GLD, the NEM, gold, RLG. This is permanent, okay? So if you missed out on this run in any capacity, if there is a sinking of liquidity in the system, gold can and will pull back like all other assets will. But now is an opportunity to sell spreads to the downside, looking at Newmont, looking at some of these other names that are very strong momentum names. If you missed out on these runs, selling spreads down here at the $80 level, the $75 level, this is a trend. This is a major trend. This is not going away. I don't know why people think that somebody came out and said gold was going to 2,600. I will sell that person the insurance all day. I will sell those puts all day. So once again, strong momentum, looking to sell to the downside, 80.75, 80.77.50, going out 2-3 months. Consider it a blessing if you are handed companies like Newmont 10 to 15% lower than where we are right now. This is not going away. We are at 100% return since March of 2024. Chip strengths and bank earnings are driving this market, obviously. ASML, somebody came out the other day and doubted our ASML call. Look, this company is an absolute monopoly in the global financial system. It is the only company. The United States government had basically came out and said, we don't want you working with China. We are going to give you unlimited business for a decade. Strong chip orders, big bank income, ASML, NVIDIA, AMD, Intel. It's all the usual suspects right now. Look at the FAZ, right? And you can see with the FAZ, the bearish ETF on the banks, it rolled right back over. And now the strength is still in the financial sector. It's bouncing back. I like all of these banks. I like KRE right now coming back off of this short-term move. And I like a trade here between that $64 and that $66 level because all of the regional banks are going to start reporting earnings. And if the big banks are doing all right, regional banks are probably going to be will be a little muted, but the reality is they had been beaten up recently coming down to that level that we saw off Friday. What I'm looking for is more chatter about consolidation, what companies are doing to improve their reserves. The top tier ones, the banks 7 to 15 in terms of total assets, they're going to be fine. It's really a question of what's going to happen with the lower tier regional banks and the community banks of whether or not they're going to be selling and how active it is going to be for M&A over the next couple of months. Why does this all matter? Semiconductors continue to lead the market upside on AI demand. Once again, all of that AI CapEx is what is driving the U.S. economy right now. That can go another 6 to 9 months, no doubt about it, particularly as more and more capital spills into the system via money printing and financial support. Bank earnings reinforce the strength in advisory and trading. That's what this has been about. The banks have done a great job at trading over the last couple of months, and forward guidance will remain very, very important for both sectors. Pay very close attention to what the AI companies are talking about their investment over the next 18 months. If there is cuts to CapEx, that is a canary in the coal mine. That is where people should get a little bit concerned about whether or not this impossible train of more and more investment in AI can and will slow down. Not really 2026, but definitely 2027. One of the other major things driving the U.S. Equity markets right now is that the dollar's weakening. The Fed cuts are obviously coming. I want you to turn your attention to the UDN. The UDN is the bearish ETF for the US dollar. If this starts to crack above that 1869 level, what you have here is a pretty clean, fun little trade, because if you are buying calls out 1 month, if the dollar weakness is continuing, what happens here is if you look at the options, particularly around the $18 call for the UDN, there's no vol. There's no, like, IBR's 1. It doesn't move, right? The volatility is not something that really spikes that much. So you can control 100 shares probably for 70 cents right now, meaning that you're not paying very much for time. It might even be 65 cents. So instead of putting up $1,860 to own 100 shares of the UDN, trying to short the dollar, you can aim for the exact same returns by simply buying a call that is in the money at the $18 level, or maybe even going down further if you so choose. But basically, the key point here is you don't have to pay much to do it. You can keep that trade under $70, and I might actually move in that direction relatively soon with our NVIDIA team. All right, and finally, on top of this, the AI trade risks. This is just not going to go away because, once again, people who are stuck in the past when it comes to valuation metrics, they're going to look at the AI trade. They're going to look at companies like NVIDIA trading at 55 times earnings and say, hey, this is too stretched. The markets are too stretched. They're ignoring the fact that price to earnings is a very pre-2008 style of valuation metric. What we really want to focus on is the fact that those top 10 stocks in AI, they're in ETFs. They're heavily, heavily, heavily supported by passive investment. They continue to be the place where all of the retirement capital continues to push. There's tons of money in the CapEx space. Oh, and by the way, NVIDIA's earnings are keeping up with its performance. So as we look at this right now, the whole concept of the over leverage idea, this will unwind if momentum goes negative. It's not going to go negative in the middle of a positive momentum environment, particularly if technology stocks are in the green as well. This is just one of those things that is heavily, heavily noise. If the AI stocks do sell off, I assure you it's not valuation that is doing it. It's the fact that leverage is unwinding in the financial system. And that is why we watch that very specific signal every single day. If we go red, you will know that becomes the opportunity to tackle a company like NVIDIA or AMD or Palantir, because as we have seen, a company like NVIDIA has fallen as much as 33% during a negative momentum event that happened last August 2024, and it happened in April of this year as well. You just have to be very patient and wait for those opportunities to emerge before you start shorting those mega cap stocks. 9:04, we're a little late, Charlie. I apologize, my friend. He was probably on time, though, wasn't he? He didn't even say anything. What happened? Can somebody check on Charlie, please? Is he okay? Charlie? Charlie? There he is. All right. Thanks, bud. Appreciate it. All right. Real quick, digging into this little quiet time, right? Want to look for some nice little moves. We're going to pull up our Thinkorswim real quick, and we're going to look at Dollar General. DG. Well, there you go. That's what we're looking for. We're looking for that continuation of trend on that 8-day moving average, as evidenced in light blue. Very nice. Light blue, pink. We're getting into the 1980s LA colors today. Think The Driver. Was that the name of that movie? Whatever. Grand Theft Auto. All right. So we're looking for a move above that 50-day EMA. That's the orange line right now. But right now, looking specifically at Dollar General, what makes this attractive? Well, it's basically the fact that people continue to have to shop there. That's brutal. Do you think they're going to go public with those really nice city-owned grocery stores in New York? Those will do great. DG 105.85, push above that key level. Let me take a look at this real quick. DG, we're at 105.60, so we are back above, like that, above that EMA. So what I'm going to do here, I'm going to go out to the 21st. Probably not, because earnings are coming up. Let's take a look. When are earnings for DG? They are, oh, December. Okay. So a little simple trade here. October 31st, if I can get it, that's a wide spread, unfortunately. Let me go to the November 21st. That'll do 105 and writing the 110. All right. 105, 110 for Dollar General. And that's what we're trying to get back to. We're trying to get back to levels that we haven't seen September 9th. We have seen moves back up to 115 recently. That said, a nice little trade here. 192 to make 308, 160 max return, probability of profit at 46%. So again, very simple. The November 21st, 2025, 105 call on November, selling the 110. Keep it simple. What about 5? No. No. 5 below? No. That's like asking if Spencer's is a good company. I mean, look, it's bouncing back. I would prefer Dollar General just because. But not. I mean, look, momentum's there. It's all the same gravy at the same point, right? So again, you're looking at consumer cyclicals. You're looking at this bounce back, but I want to see that 8 above that 20 before I make any move on that. All right. So once again, we're making the trade. It's gonna happen. It's gonna happen at 9:30. 105, 110, November 21st on Dollar General. Sweet. All right. What else we got? Well, let me go back to my list because I lost it. This is just fantastic journalism. GNRC. So this is a pure momentum stock. In fact, it's the top momentum stock on the board. This is a tough one, obviously, because of that big pop that we saw, $10 move on GNRC. But momentum creates momentum. And this is one of those names that when you look at Generac, it's got those qualities. Very strong RSI up at 62, MFI flowing at 74, and 20, very positive on ADX and a crossover a couple of days ago on the MACD. What's nice about this? Well, again, this stock has recently traded as high as that 202 level. It actually has a little bit of a short float, right around 4.4%. What is the option strategy for Dollar General? Buying the November 21st 105 call, selling the 110. It is a call spread. Okay. Done. Can I do that in this thing? Who does that even go to? How many people? Oh, 4,000. If I post that in this room, it goes to 4,000 people who watch this show. And they're going to be sitting at their phone eating breakfast going, what? That's why you got to be in the room. You got to be in the chat. You got to be in the chat. Just all of a sudden, my mother's like, what is this, Garrett? You know that's going to happen. She's like, I don't, DG, what's that? Don't know, Mom. I don't know. You don't watch the show. Crocs. One of the greatest, dumbest companies in the history of the world. Just dominating, by the way. Everybody. Oh, no. I will, Paula. Good to see you. One of the dumbest, greatest companies in the world. If you like shoes that look like Swiss cheese, I recommend Crocs. It is a great momentum stock. It's a great momentum stock. 84.60, right? That's kind of where we sit right now. This is a tough one, but I do just like trying to blow through a very specific line. And that, again, is going to be back at that 200-day moving average or 50-day moving average, which is that 85 level. One of the key things, unfortunately, is that it is expensive to trade this stock. You go out into November, it's a 10% expected move on the stock. So Crocs, why is that the case? Well, they're going to report earnings on the 30th. So if I'm looking for a short-term move around this, it's a little tricky simply because what I'm really just looking for is that test right here of that $85 level. And if I can do that, I want to do it cheap and I want to do it with a higher probability trade. One of the major issues, unfortunately, is a non-third Friday option is extraordinarily wide on the bid ask. Same thing with this Friday, even though this Friday is third Friday, the 84 has a $1.40 spread. So you could buy the stock, you can look for some momentum. Maybe we get a pop, maybe we get a move. Not something that I necessarily want to hold through earnings. I don't know how the Swiss cheese shoe industry is doing, but I think out of all of this, I think you've got GNRC and Generac. I think that those are two very good ways to approach this. I'm going to warn about any of the weak stocks right now, just because momentum has returned back. And when you move back into a positive momentum environment, that typically is where you want to stay long. So a couple other names to pay attention to. Let me just kind of give you a few more watch list names that I think are relevant today. Primary ones are going to be Generac. It's number one on the board. Also look at some of these smaller momentum names, companies like PAC. Again, PACK, Run Pack, just a nice move. Again, a little bit, it had momentum before this recent sell-off, and now it's starting to get back to where it was. These are the types of names that, again, I like this back up to around 650 after the recent sell-off that we saw. And again, you're seeing the strength across the board here on all of our other technical indicators. Delta's obviously crushing it. Delta was a very positive momentum stock into last week with their earnings, but this recent downtick took a lot of the air out of momentum names over the last couple of days. URI is just on fire. This is United Rentals. This is Rentals. This is up almost 80% since April. And again, momentum. It's just pure momentum. Pure momentum. And I don't have to go back and tell you again, but I'll tell you a fifth time. Palladium's now up to 140. We were in at 100. This is not going to slow down. This is going here. I am long as long gets on Palladium. I love this chart. I love the long-term crossover here on the adjusted 820 on Palladium. If you missed it, do what we talk about all the time, sell spreads. Look for a high probability spread. This is a beautiful long-term chart. Am I saying 250, 280? No, I'm saying 200. And then I'm out. Looking for the 100% gain and moving on with my life. Tapestry as well. TPR is doing very, very well as well. This thing is just a absolute momentum beast, continuing to run higher. Same thing, sell spreads or just buy at the money here, sell out of the money here on the 120. On the downside stuff, look, CF's a tough one. It really is. CF Industries is a great company, but there is weakness, and I think that this is just more of a broader trade issue involving the Trump administration. Hard to short, very hard to short, but you can see the weakness that is persisting. If I can get back down here at the $80 level, I may actually buy it. CRK is Comstock. No, not Comstock. That's Comstock Resources. This is Jerry Jones's company. This has been chomping around. I would honestly, in any environment, try to buy the stock of $15, and that's largely because Jerry Jones put $100 million into the stock at $8. Just saying. GRAB. Grab Holdings. What do you do? Well, it bounced back this morning, 2.5%. So you might actually have a nice little trade here, just buying the stock. See if you can get that MFI above that $50 level, and then see if you get back to that 650 level. That's momentum right there. So, hey, what are you doing? Let's go down here. I might buy that. See if we can get back to 650. PLAB is a great company. We've talked about Photronics a lot. Again, same thing. You don't have to do much. 25 to the 20, 24 to the 25 call. You buy the 24, you sell the 25, you buy the 22.50, you sell the 25. Just look for relatively safe options. And you got this nice move back above RSI MFI pushing back above 50, showing solid momentum. ADX flipping at the moment. MPAA, couldn't tell you what it does. Sounds like some sort of group that rates films and whether or not they should be rated R or not. I think that's actually right. Motor car parts of America, same thing. Momentum moved down. That happened from last week, and now it's bouncing back. You got that back to that upside that where we were 1750 on the auto parts. And again, it's funny because you look at this whole thing and you say to yourself, well, wait a minute. I thought that auto loans were defaulting. I thought the middle class was in trouble. I thought that there was all this problem with subprime. Yeah, there is. But there's a lot of money flowing around, and money's got to go somewhere. And this stuff has been beaten up. 4.3% short float, breaking above key moving averages, turning algos back on. Oh, and by the way, interest rates are about to get cut, and they're about to end QE. The bottom for that might have been back in February. HRB is a company that I still don't understand how it's in business, but it's still around. I got ripped off there in 2013. I will not go back, and I'm not going to trade this. Boo. But the momentum's there. It's back above the 50. That's a good place to draw a line in the sand, buying the 51 or buying the 50 and selling up to the 52.50 level, selling up to the 54 level, keeping your stops tight and looking for a continuation of momentum if we get it. And that's where we sit right now. All right. I'd short Jerry Jones. You can see some of the contracts he signed over the last few years. Yeah. Here, let's do this real quick. I don't care if he's bad at football. I really don't. What I cared about is this. If you go back the last year, and I'm going to spoil your joke. If you go back to 2024, there you go. Jarrell W. Jones. Jarrell. There he is. August 2024. This is all Jerry Jones. Okay. So look, I don't care if his football team fumbles the ball on the 1 yard line. What I cared about was that this was the second largest insider buy of 2024 after TKO of all things. So let's go back and let's just be very cognizant of the fact that Jerry Jones put $100 million of his own money on August 8th at $9, and it doubled in 5 months. And then he took that money and made the mistake of not giving it to Micah Parsons. He could have just done that, but he didn't. But he's still very good at timing. That's all that matters. All right. You guys are asking about a couple of names. I'll look it up real quick. NUKK, Nucleus. Yeah, this was on our list, wasn't it? Well, nice 10% move. Look at that. Yeah. How about Nuke? Well, the momentum's right there. $20. It's right there. Momentum is very strong. This can get out of hand very, very quickly. That's a great chart. 6 to 12, 12 to 24. Momentum's there. Pick up a couple of shares of Nuke. I'm going to do that. Crocs. You're still talking about Crocs. Get the GNRX. You mean GNRC, right? You were talking about Generac. 185 to 200. All right. PayPal. Is PayPal coming back? I hope not. How's that a company still? Ugh. Hey, look, if you bounce above that 20 and that 50, you got an opportunity here. It's not about what he does with the money, Don. It's about how he makes it. Nobody judges what you do with your money. They might judge how you get it. They're not going to judge what you do with it. You want to buy 77th house? You want to buy Little James Island? I think that's for sale. Nobody cares. The Will Ferrell effect. All right. It is 9:20. I don't know if Don is joining me at 9:23. And if he is not, he'll tell me. And if not, I will sign off right now at 9:20. Guys, look, Again, momentum chopping around. This is one of those rare type of periods of time. Be very, very disciplined in this environment. Be very, very focused on following technicals, looking to ensure that you are playing defense in this environment. There's a lot of opportunity to make money every single day, but it really comes down to discipline. Don wants to play some music, so I'm going to let him do it. But I just want to remind you, there's a ton of opportunity. Learn the rules. There are many different strategies that all of our experts here at TheoTrade do. Don is going to talk to you about volatility. He's going to talk to you about expected moves. We're going to dig into what is being said today by me about various technical levels. We're going to look at unusual options activity. We're going to look at what's happening with short interest. We're going to look at pure momentum like Gianni, because Gianni had an absolute screamer in BD. What was it? BDLR? BTL, something, some crypto name. It's up 20% this morning, and I'm mad that I didn't buy it off of his recommendation. I'm not doing Bernie Sanders again. I'll do it tomorrow. I gotta go. See ya.